Good morning, folks. Happy Taco Tuesday to those that celebrate this momentous occasion. Hope everyone's having a good trading week so far. Certainly been a little bit bumpy, a little bit weird, not a lot of liquidity, some pretty interesting expressions of price discovery in these markets. So we'll see what it looks like. Tuesday tends to be a pretty constructive day for stocks overall. But before we dive into Bookmap, I've got a couple things to go through real quick with these slides. The first is everyone's favorite slide, the general disclosure. All Bookmap Limited materials, information, presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. A little bit about me. My trading journey began in 2005. I funded my own account, began trading stocks, then moved on to options, futures, and commodities, as well as Forex as I expanded my horizons. In 2006, I started rolling my trading profits into long-term investments. And I want to just stop here for a moment and suggest that for folks out there, consider this. Don't just grow your trading account and keep growing it and taking bigger and bigger risk. Consider rolling profits into longer-term investments because over time, that is really how wealth is built. And whether those investments are in fixed income or stocks of varying kinds or, index funds or whatever suits your style, I strongly suggest all traders consider that because it, for me, has been life-changing. And for all the other traders I know that have been at this game for a long time, that's really how you build wealth. And some folks might buy businesses, they might buy property, and otherwise consider it. I navigated through the great financial crisis, which helped me to better appreciate the importance of understanding intermarket dynamics, momentum, and macro. I managed to get out of the way of the great financial crisis for the most part, but it was mostly luck and a focus on technical analysis that had me cautious. Remember, I had started my trading journal only really 2.5, 3 years earlier. Then the great financial crisis kind of came out of left field. And sure, I saw the ninja loans or the no income, no job proof kind of loans that were coming out. I saw folks buying homes that obviously shouldn't, but I didn't connect the dots that there was this giant systematic risk building. Instead, I just looked at this long-term chart of the S&P, just the S&P itself, not total returns, but just the index itself. And I saw this large potential double top forming in late 2007, going back to 2000. And I said, well, if it can't break above here, then I don't really want to be in. So I'll start harvesting profits. And I continued through the fourth quarter of 2007, just looking at it from a technical basis. And it never did really make a big move over that top from 2000. And, the rest is history. We had a pretty life-changing financial crisis. And my point with that is, however you look at the markets, once you start to have a system that works for you, build on it, trust in it, and continue learning. That was a bit of luck, but it was also the technicals telling me something that the rest of market participants were a little bit skittish, taking price new all-time highs when there was so much risk building up. Now, my approach has shifted from being much more discretionary early on to much more systematic now. I drive my approach with momentum, price action, options flows, sentiment, positioning, volume profile, and the big picture. It sounds like a mouthful, I know. But it's because of those convergences that I can have higher confidence in the outcome of potential trades, but also those convergences help to build a better way of identifying these setups. For example, just very simply, if you see momentum and the broader macro picture agree about a trade, it's probably a better trade than if it's just one or the other, particularly if it's just macro and momentum doesn't agree. That's not a trade. But if you have these convergences across different areas that you're watching, that actually can be a pretty powerful way to view the markets. So I want to just kind of let that breathe for a second because a lot of the time I see folks just very focused on one area, and that's fine if it works for them. But what I found in my own journey over the last 19 years is that it really does matter quite a bit when different areas agree. Whether it's a micro time scale like intraday and you see options flow agree with where liquidity is offered and where there's key areas and volume profile, those convergences can be powerful. or a swing trade time frame. And you see convergences in volume profile. Maybe there's micro convergences, for example, fundamental improvements in the company. That can also be very powerful. And momentum, obviously, agreeing with that. This is how you become more sophisticated and systematic. Now, there's nothing wrong with being a discretionary trader, but it's much more driven by emotion and psychology than data. And that's where I drew the line and found much more success for myself being a systematic trader. I began working with Bookmap in early 2022 because I saw great value in the way their platform displays market data. Really love the icebergs, the stops. I love how the program has come a long way with the add-ons and new features they built, but they've also made it easy for people like me to build add-ons into the program. So I've added a data stream that analyzes options flows at the CBOE and focuses on SPX, translating it into S&P 500 futures levels. And we can see every day how options move the market. S&P 500 options trade about $1.2 trillion every day, with about half of that expiring the same day. U.S. equity futures as a whole trade about $500 billion a day. So it really is options moving the market. We used to say it's the tail wagging the dog, but let's be honest, options have become the market. I co-founded TraderAid in 2022 and MacroVisor in 2023 to share my experience, ideas on market opportunities, and education. I also build a number of unique tools and models, as well as provide one-on-one coaching. Now let's get to our exclusive Bookmap deal. You can save up to 40% off of Bookmap plans at TraderAid.com/bookmap. Hit the link, scroll down to the specials at TraderAid.com/bookmap, and you can see those discounted plans. And when you sign up for one of those plans, we get a small commission. So it helps me, it helps TraderAid as well. And we do have a Halloween special for you as well. If you'd like to check out TraderAid right now, we have a fantastic deal. This is one of our best sales of the year. It's actually the first sale we've had in many months. But I wanted to put out a nice sale for Halloween because it's a fun time of year. There's a lot of crazy stuff going on right now. I figured with all the prices going up that we've experienced over the last several years, it'd be nice to give people a solid deal. So visit TraderAid.com or go to whop.com/TraderAid. That's WHOP.com/TraderAid, and use the code Halloween31 at checkout for 31% off your first month, quarter, or year, depending on the plan you choose. Now, the folks at Bookmap would love to have you join us on their Discord, and it is a great Discord server. They've got all kinds of resources. It's a supportive community, and there's regularly educational content on there. So if you're really trying to upskill in Bookmap, this is a great place to start. You can use the QR code on screen or visit discord.com/invite/Bookmap. So with all that said, let's dive into Bookmap, talk a little bit more about what we're seeing in the market this morning. And I do hope everyone out there is having a good day so far. I know it's a bit of a crazy, hectic, chaotic week with earnings from, 37% of S&P 500 market capitalization reporting in a single week. Some estimates even have that over 40%. So one thing we're going to do today, just for a little bit of fun, I'm going to show how you can filter out the market maker bracket that you see here in the S&P 500, because some folks have said, well, Bookmap doesn't really have much value anymore because, you have these brackets here from the market maker algo. And the fact is that's not true. There's add-ons that you can use to actually filter that right out. Okay, so we're going to play around a little bit with that this morning. Go to configure add-ons, right? You've got TradeMap Pro. You can use Lite as well, but I prefer to use Pro here. And I'm just going to double check on one thing because I have my options data feed also configured for this, but I need to just double check the naming convention I use. So bear with me one second. Okay, so that's just going to be -1. And so you can see I've named the contract that TM Pro is going to create. It's ESZ4.CME-1. That's going to pull data from ESZ4.CME at Rhythmic. And we're going to add what's called the bot remover, which is aptly named. Now, it doesn't remove me. I know my avatar is a bot, but no, don't worry. I'll still be here. But it does remove those brackets. You just got to kind of crank it up a little bit. You hit the play button, and it will create a new chart for the S&P. All the way over here, we've got this new chart. We're going to do some customization. We're going to make this chart look a little different. And I'm going to do this just to demonstrate how versatile Bookmap can be. Okay, so bear with me once again. All right, so we're going to add the options data, which comes in as a cloud note. Right. Okay, there it is. That's pretty cool. And we'll just sort of reconfigure things to make sure we have enough room in these columns for all the labels. All right, so that's pretty decent. And then, you know, I'm going to mess around with the bubbles and replace them with candlesticks just for the purpose of today's session. I do like the bubbles. I think they're helpful, but I know some folks prefer to see things with candlesticks, so we're going to play around with some candlesticks today. And there you go. And then we're going to see, you know, so we've got the icebergs and stops in here. That's pulling data from the original chart. I'm just going to kind of pull this all the way over here. You can see I've got 20 instruments loaded, so a lot going on, right? But you can see there's a bit of a contrast. There's the bracket. There's the lack of any bracket, right? So you can actually see where liquidity is building up. And this will be helpful once we get into the regular trading hours session. And you can also see I was able to pull over the options visualizer data, and you know, it's basically complete. The only thing that I'd really like to see in the future is be able to put the subchart icebergs and stops. I haven't seen a way to do that yet with TradeMap Pro, but perhaps that's in the works. But other than that, you know, you can pretty seamlessly drop in TradeMap Pro and again, get rid of this whole bracket that annoys traders. And I understand why. I mean, it obviously kind of obfuscates where liquidity is hiding that's not part of that market maker algorithm. So instead, you know, we can visualize it this way. We can also see yesterday's options data from the flows, the hot call and hot put. Those are the two most active SPX options flows. Then we have the warm call and the warm put. Those are the second most active. This is full chain. I look across the whole chain, not just the 0 DTEs, because it's really about the impact of the whole chain. That's one of the reasons this tool tends to work quite well. And then you can also see the positioning areas. Gamma 1 is the second largest level of gross gamma exposure next to the volatility trigger. And then you've got the gamma flip level, which we're trading just below ahead of the trading day. And folks, if you're out there and you're watching and you have questions about what you're seeing on your screen, please ask. I do want to make sure you get some value out of this, that you're able to, you know, learn a few things. Personally, I love using Bookmap for intraday trading, for looking at where the liquidity is. I find it to be extraordinarily helpful. And I know folks try to kind of figure out how is this going to fit in their own trading system. And that's one of the purposes of this stream, is to demonstrate some of the utility of Bookmap and how it may work for you, especially if you're a shorter term trader. Now, this morning, we do have some data on the calendar. We did get the Case-Shiller data earlier, but coming up, we've got U.S. JOLTS job openings. Prior reading was 8.04 million. Forecast is 8 million. A deviation of 500,000 more than expected could push rates higher and put some pressure on equities. A deviation of 500,000 lower could push rates lower and may give a bid to some of the longer duration risk out there. We also have U.S. Conference Board consumer confidence coming out at 10 a.m. as well with JOLTS, so it's a double whammy. And the expectation for that is 99.5. The prior reading was 98.7. And then after the bell, we have Alphabet's Q3 earnings, which I think will be a pretty big deal. This week, again, the big volatility catalyst is earnings, right? That's what we know of, at least. Those are the scheduled volatility catalysts. And it's a pretty chunky amount of big cap tech. You've got Alphabet, Amazon, Apple, Meta, and Microsoft reporting all this week. So that's a pretty big deal. That's a lot of big tech reporting at the same time. It's also just the second most S&P companies, like listed companies, reporting in a single week this week as well. So it's really peak earnings season. And we're going into this with a market that's not particularly well hedged. So if expectations are not met, that could be a bit of an issue. That being said, and here's the kicker, and you got to love this, sell-side analysts have revised down expectations so much, it'll be kind of hard for companies not to slam dunk, not to beat expectations. So let's go back to Bookmap here and talk a little bit about what we're seeing on screen. It's about 13 minutes from the opening bell. I'll be live until 10 a.m. with this stream. So on screen, if you're not familiar, this is the heat map. The heat map shows you where there is liquidity, both in present time to the right of this white line and historically over the timeline of the chart. So you can see how that takes shape, how it changes, how it moves with price. It becomes especially important during the trading day. It's also interesting because you can zoom out and see where liquidity may be stacked in other areas, right? So for example, let's say you have a day where the market opens, it's moving higher, and you start to see offers stacking above, right? Like for example, you see this offer stacked above here. If you start to see those offers stacked above and sort of stair-stepping higher, that tends to help to pull the market higher, especially if it's able to push through those offers, release that liquidity, and keep moving higher. That's telling you that buyers have plenty of demand to keep pushing price, and those offers end up being a bit magnetic as they comport with the overall trend. So they can be good areas to look at for potential exits, like if you're in a intraday trade, see a really large offer overhead, you're getting close to the extension you think that the trade may get to, maybe it's a time to take off a fourth or a third of that trade and keep watching to see if the market still has juice. If it does, you look for that next offer. You may see the market get up to it. I don't tend to put my limit order in at those offers, for example, on an upward trending day. I put it in about a point and a half lower. Why? Because it increases the chance of getting my fill, which gives me a little bit more agility. Because sometimes you'll get right up to one of those offers and you'll reject. Usually a point and a half away, you'll suddenly see buyers say, oh, we don't have the liquidity we thought. We're not going to be able to get through there. And so for me, it improves my outcomes. So I've tested going at the offer and just below the offer. And just below the offer, I'm actually more profitable over time because more of those trades are hitting. Interesting update from Apple this morning. Apple's using its India factory for iPhone 17 development, according to the information. Also, in terms of the story that inflation is all behind us, we may want to double check that because home prices, which are the largest indirect contributor to CPI and PCE through shelter inflation readings, rose just about 1/3% month over month and 4.2% year over year. There's usually a lag time, somewhere between 6 and 12 months before that really gets into shelter readings. So there's still plenty of upward price revisions in home prices coming through, continuing to keep shelter inflation somewhat sticky. That could be interesting as we get into the Fed meeting. I believe that's next week on Wednesday where they make their decision. Be interesting to see how they talk about that 50 bips cut, which I still think was a bit of a mistake. I don't think they needed to go quite that heavy in the September meeting. I know there's a lot of different theories. Oh, it was politics. Oh, the economy's falling apart, this, that, and the other. The upside economic surprises suggest otherwise. So does the upward move in rates. And this is important because the 10-year, if it gets above 4.5% on the 10-year yield, that tends to be a line in the sand where markets get a little more skittish. Once we start pushing above there and that, basically risk-free rate of return of longer duration becomes more attractive, you do tend to see folks exiting equities, particularly longer duration risk, unprofitable growth in tech. So it's something to take into consideration, watching yields as we go through the next, say, 9 trading days, because there's a lot of different things going on. There's auctions, there's the Treasury announcement, there's the Fed meeting, and even coming up a little later, there's the China National People's Congress, where they may announce stimulus, and that does indirectly affect U.S. yields. Because if China does usher in some growth and that does create some inflationary impacts globally, that could also be an upward push to yield. So something to keep in mind. I'm just going to take a look at the pivots that I'm watching for the S&P this morning, and of course, I'll share them with you all. All right, so today's pivots 58.75, 58.67, 58.58.50, and 58.39.25. I'm going to put this into a screenshot and share it so you all can also take a look. All right, so we're just going to drag that on screen and apparently just zoom it out a little bit here. So there you go. 58.75, 58.67, 58.58.50, and 58.39.25. These are all generated dynamically. They're updated in real time as volume profile changes, and this can be a pretty helpful tool for traders that, obviously you can do work on your own charts and you can come to similar conclusions, create your own pivots, but this can be a time saver. And coming into today, just checking on yields, the 10-year is trading at 4.329%. So not terribly far from that key level we discussed of 4.5%. Quick look at futures ahead of the market open, just about 5 minutes away. Cash implied levels right now, S&P 500 5813.17 on cash, down 0.17%. NASDAQ 100 cash implied open 20,353.50, flat. Small caps, Russell 2000 implied open 2228.60, down 0.7%. And Dow 30 implied open 42,232.40, down 0.36%. So a little bit of red out there. Looking around some of the other futures, crude oil coming back a little bit from yesterday's absolute destruction. I personally think that was a bit of an overreaction. I get it. Folks were longing crude into the weekend, expecting that the attack on Iran was going to be more devastating, that it could impact their energy facilities, that it could lead to a cascade of increased hostilities in the region. But quite frankly, since April, the back and forth between the two countries has been, well, more subdued than maybe one might have expected, especially looking at all the doomsayers on places like Twitter saying, oh, no, this is the World War III trigger. And of course, we've been hearing that for 2.5 years, whether it's Russia, Ukraine, or this other unfortunate conflict in the Middle East or otherwise. The reality is these countries don't necessarily seem to be gunning for absolute war. It's still a rather contained regional conflict where they're even warning each other in advance of these strikes. That's not what you do if you're going for the element of surprise or trying to inflict maximum damage or escalate into a war. So oil fell significantly, was the worst day in 2 years yesterday. I believe prices fell about 6%. And I'm just going to go out on a limb and say there's some decent support at 65. If we were to go down there, I would be interested, but more in energy stocks than oil itself. Energy stocks have been pretty darn resilient compared to oil. And that relative strength has me curious. So I would be looking more at XLE, XOP, CVX, XOM, things like that if we do get another flush in oil, or even if we start to reverse from current levels. Now, one thing that's interesting, you can see this volatility trigger here. It is just around the bottom pivot of 58.39.75. That's important because that's a convergence. We talked about that a little earlier in the intro, that I like to look at convergences. So I do think if we made that meaningful push lower, below the vol trigger, below that bottom pivot, that's where you could get some more determined selling. That would also put us further below the gamma flip level. And as you get below that gamma flip level, it does make it more likely that dealers may hedge in a way that has them selling drops and buying pops. And that can be a bit of a realized volatility catalyst. So just something to think about here as we get into the trading day in just about 2 minutes here on Tuesday, October 29th, 2024. Dan O'Brien asks, hey, Mayhem, are we in positive or negative gamma environment? Dan, we are slightly negative. You can see the gamma flip level on screen here. Let me see if I can get some more refined levels for you, and I'll just pull this up from my bot on my Discord. I wrote it so that it can do these things for me. So the naive model we use calculates the SPX gamma flip level at 58.18. And that translates to ES 58.56.75. So we're currently trading 58.53, so we're just about 3 points in negative gamma. So not really too much into negative gamma to make a lot of it. right? More neutral. And the reason I say that is, you know, the effects become more pronounced the further away you are from that flip level. And let me see if I can pull this chart on screen to kind of demonstrate that. All right, so here's the gamma flip level chart that we have. And you can see as you kind of move further away, there's this sort of peak impact. So it's almost like 120 points away on either side that you really start to see a larger impact from positive or negative gamma. So for now, I'd consider us, even though we're slightly below, pretty much neutral. Hopefully that helps. Let me know if you have any questions that follow on that or otherwise. And folks, if you are enjoying the stream, do like, share it around with other folks. It's always good to have more people tune in. Also helps me, obviously, if you're having other folks tune in. But really, my point here in doing these streams is trying to help get the word out. This can be a pretty helpful tool for traders. So we're going to zoom in a little bit as we are at the market open now. And we are taking a little bit of a different approach today, as y'all will notice. We're using these candlesticks because I know some folks don't necessarily read the bubbles as well. So I wanted to try something a little different, make this a little more approachable, but also demonstrate just how flexible Bookmap is. And we do see a bit of a draw here at the open, pushing further into negative gamma territory. Can see some passive buying coming in here, but not really enough to subdue this move of yet. We also see some decent bids below us. As you can see them sort of starting to stack up a bit. So that is, again, we talked about this a little bit earlier, but if we're moving lower and you have bids coming in below, that is a bit magnetic. That is to say, if you look at the market as a sort of three-way auction, right? Buyers exceeding sellers, so we move up. Sellers exceeding buyers, so we move down, or equal, so we go sideways. Right now, you definitely have selling pressure, supply exceeding demand, and you've got these levels of demand lower that market price action can actively seek out. And you'll note that one of those levels also correlates with the volatility trigger and that lower pivot. So let's zoom in a little bit on this price action. You can see just a little bit of stabilization here potentially. I'm going to go back out to the 15-minute. More passive buyers stepping in, open order, 105 contracts bought there so far, but there's passive sellers overhead as well. It's a bit of a confluence going on. But overall, sellers have the upper hand. We're going to switch to the other chart for just a moment, just to demonstrate. Here you can see on the subchart, there is that passive buy that overwhelmed passive selling for just a bit. Now we've gone back to neutral. So, you know, the passive buyers aren't really showing that much determination so far. So we're going to zoom this out to about 30 minutes here. And you can adjust the candlesticks, their width, what period they represent, and all of that as well. Just click on that microscope setting. So if you want like smaller duration candlesticks, for example, 30-second, you can do that as well. We do see that push continuing. We're moving lower, new session lows on the S&P. And that's sticking, those bids below, certainly acting a bit like magnets here for the S&P 500, as you can see. We're now likely to try to release some of that liquidity at 58.40 and then 58.38. You do see a decent bid in some of these other stocks this morning. It's interesting, the contrast. BABA has a little bit of a tepid bid this morning, up about 0.25%. Pre-market, it was up about 3%. And we see S&P futures starting to push down to that 5840, releasing that liquidity next. Passive buyers are still coming in here nibbling, but not enough to deter the selling pressure this morning. Some of this is also hedging ahead of earnings. As I mentioned earlier, this is a rather poorly hedged market. And one of the phenomenon that we see these days is just-in-time hedging. You might ask yourself, why wait till the last minute? Well, that's because there's so many vol sellers that reduce the premium on those puts. So if you're hedging, you're losing money immediately because of that vol selling. So now we see hedging patterns changing, and folks are hedging closer to the last minute as a matter of necessity. But it also leaves them a bit more vulnerable to unscheduled volatility catalysts. And checking in on markets, S&P getting close to a pretty key level of gamma exposure around 5,800, trading 5804.50 right now. I'm just going to pull up that chart as well to show you all what I mean. This could be an area that provides some support, and curiously enough, it goes right into the vol trigger. Like, this is the vol trigger level, right? So if you look at this level right here, this 5,800, that's the largest level of options exposure in both puts and calls in the S&P 500. So it is likely to be at a bit of a magnetic level given the trend this morning. We could get pulled into it, kind of stuck there. But if we do push below that, you're pushing below the largest level of options exposure on the SPX options chain, and that can, well, it can unleash some vol. Can create a bit of a more likelihood of downside pressure continuing. So that's why we're looking at that vol trigger level, and we're looking at that pivot around 39, that convergence area, as a key level of potential support, a decision zone for market participants. We can see we're about to release that next bit of liquidity down there around 38. But we also see that there are some offers stacking up above us a little more here. So we'll be keeping an eye. Let's take a look at the overall aggregates here. So yeah, passive flows are pretty much neutral here right now. We can see they've been on both sides of the tape. We're going to use this chart for the sort of really zoomed in view. So let's just take this as a 3-minute view. This will be sort of the microstructure view. You can see that bid at 38 is likely to get released here. And you've got another several series of stacked bids below that. So folks overall in this market looking for more downside. You just saw that 38 liquidity released. Sellers seem relatively undeterred. And you do still see these like little bits of passive sell orders coming through here and there as well, particularly when buyers try to kind of push things higher. Not a very liquid order book either, about 40,000 order book depth on ES today. I'm going to zoom out a little bit to the larger view here. We can see it's just been really pretty consistent downward pressure from the open. Things were looking more constructive pre-market, but now we're seeing that pressure just sort of continue here. Yesterday, a bit of relief from the weekend being a non-event. Today, a bit of resumption of skittishness for other reasons. And I think, again, some of this flow likely has to do with hedging ahead of earnings. This big earnings week, where somewhere between 37 and 41% of S&P 500 market cap report, the second most listed companies in the S&P reporting in 1 week, but certainly the most consequential in terms of the size of the companies reporting. Alphabet, Amazon, Apple, Microsoft, and Meta. I do have a decent bid in silver this morning. It's up 1%. Gold up about 0.4%. Platinum up 1%. Palladium up over 2%. And copper flat here. But overall, the metals getting a decent bid. And rates are pushing higher, led by the longer end of the yield curve this morning as well. Yen under pressure, dollar appreciating, rising rates and an appreciating dollar, typically not a great thing for stocks. They've been able to ignore it for some time, really over the last month, month and a half, but you get to a certain point where it can't necessarily be ignored. And for me, that usually is around 4.5% on the 10-year over the last year and a half, 2 years. But we'll see. Maybe that skittishness starts a little earlier. We should start to see some of the options flow data calculated by the options visualizer here in the next several minutes as well. That'll be interesting to see where the views are of where this market could go today. We do see some support coming in around that vol trigger level, that S&P 5800 level. We talked about that earlier. We showed on screen the options positioning there. So it does make sense for buyers to try to stage a bit of a defense here. And we do see a fair amount of liquidity above, more than below now. So it looks like the market is more interested in trying to make a move higher from current levels. And we're continuing that push higher from that vol trigger induced bottom, that pivot vol trigger options exposure convergence area, providing some solid support so far. There are some passive sellers layering into this. We also see some shorts covering, stopping out. 69 contracts stopped out there on that push higher. And buyers starting to absorb some of that offer liquidity overhead. We'll see if they have enough demand to make a more determined push. I think the most they're really going to be able to realistically get to is around 58.50, maybe 58.52, this sort of convergence area between the point of control VWAP and some larger sell deltas could be a bit decisive. And as mentioned in the chat, Russell is looking pretty weak, down 1% on the small caps. That's much worse than the S&P down 0.27%, the Dow down 0.41%, or the NASDAQ down just 0.11%. Vol is also lower today. Spot VIX 18.7, down 0.5%. And we're seeing that push off that vol trigger and lower pivot induced low. So far, so good. Buyers absorbing those offers as they move higher. Passive sellers layering in some orders, but not enough to deter this reversal we're seeing off that initial selling pressure to start the day. We're going to take a look at some of the other stocks and futures contracts here. Let's start off with the NASDAQ futures contract. Really resembles what we're seeing the S&P, maybe getting a little ahead of the S&P here as we push to that convergence level between VWAP and the point of control. So NASDAQ looking like it may have put in a little bit of an intraday double bottom here. Russell, however, doesn't really feel the same way. It's having some trouble getting off the mat, which makes sense. It's the most rate-sensitive index of the majors, and rates are moving higher. Speaking of rates moving higher, if we zoom out this 10-year contract, you can see exactly what I'm talking about. From the start of the European session to the present, there's just been selling and selling and more selling in the 10-year contract. Maybe starting to stabilize a bit here in the present, but it's been nasty overnight, and that's been one of the reasons you've seen that rate pressure. There's just been selling of those futures of the 10-year note contract. Crude oil, mixed picture here. We're going to zoom out a little bit. You can see it had a promising start from the overnight session and then just dumping this morning, right? So it got up to about 68.40. We did start to see some offers layering in, and it seems like buyers just did not have the liquidity to push through there. So now we're down about $1. And we're starting to see now bids below us being filled by sellers, and we're continuing to move lower, saying they have enough supply, right? So again, 65 is a really important level. I think we could get down there, but I do think this is overall a bit of an overreaction. So if we do, I would be interested in bidding some energy equities. Gold pushing higher today. And if we look at the overnight session, it has been a story of overall upward pressure in gold. My target still remains $3,000 an ounce. Yes, $3,000 an ounce for the first half of 2025 still seems quite likely to me. We may get there earlier. I would put a bit of a caution in, though, to say that the flows into gold funds have become a bit euphoric, as has some of the positioning. So we could still have a corrective pause or a breather ahead of that ultimate rally. Silver also looking constructive today. We talked about it a little bit earlier, but let's zoom out. And it's a similar picture as gold. You got that big bid off the European Open, and we've just sort of been consolidating from there. Had a little bit of a draw, but now we're making that push higher. Interesting note about silver. It is not really a metal that people use for investment nearly as much as industrial demand. Industrial demand accounts for 50% of silver utilization. Investment less than 20%. So I know there's a lot of theories about this big silver short, the banks trying to destroy silver and all this, but most of what you're actually seeing in bank short positioning in silver is producers selling forward production to fund present business operations. It's nothing extraordinary. It's not that unusual, and it doesn't set us up for a massive squeeze. What does set us up for silver moving explosively higher is industrial demand. The United States used 22% of global silver supply. China uses 15%. So those are the two biggest economies to focus on. So if we get, for example, more renewable energy projects in the U.S., that helps to boost silver, as does if we see China actually stimulate in size. So that National People's Congress meeting coming up in early November will be pretty important to silver as well, as to whether or not they stimulate. Bitcoin trading 71,420 here, and overnight session looks, well, a little bit like gold and silver, maybe not quite as pronounced, but overall the pressure is to the upside in Bitcoin today. Now let's take a look at some of these mega cap stocks. You've got Apple on screen, and it's largely been consolidating from the open. We did make a new high recently. Now we've just bumped down to that point of control VWAP area, just pinging between them as traders attempt to discern where this mega cap, now the second biggest company in the world next to NVIDIA, could go from here. You've got a pretty decent buy-side delta here. That's helped to form the point of control in Apple around 233.40. So I'm going to say that's a reasonably consequential level. Above that, you've got 234 with 64,342 shares on offer. And we saw earlier that was resistance. We bumped right into it, rejected, and now started moving lower. Amazon shares on screen, similar to Apple, just sort of consolidating off the open, making a bit of a cash session low, then pushing up to the high, not quite being able to push above it, and now being rejected below VWAP and the point of control. You've got a large offer at 189, about 25,826 shares on offer, maybe a bit of resistance, and then below 187.50. 13,000 shares on bid could potentially be an area where we get a sense as to whether sellers have the supply to take this lower. Alphabet shares, similar look as well, just sort of consolidating here. You do have a chunky offer overhead at 169, 34,413 shares on offer. And that point of control, a large buy-side delta from the open. That is an area shares are now testing. Chinese equities, no, moving down from the open. Had a decent bid pre-market, but now just selling down. If you look at the Chinese stocks overnight, similar look there. Take a look at Meta shares. Meta actually looking a little bit weak. It came down, just kept making new lows. Now bouncing, testing that VWAP. And you'll notice the point of control is right next to that session high. There's a large sell delta around that level. There's also a sizable bid at 575 with 13,000 shares on bid, and a sizable offer up here at 585 with 14,426 shares on offer, and then 581 with 7,455 on offer. Microsoft looking a little more sprightly than its peers so far, making a new cash session high recently, but now trading below the point of control and VWAP. Got a decent offer overhead around 430 with 32,196 shares on offer, maybe a bit of a resistance area, and then a chunky bid at 425, 24,681 shares on bid. Netflix shares popping and dropping. Interesting to see that in this stock. It's been a winner since its earnings, but seems to be consolidating some of those gains of late. And of course, everyone's favorite stock to talk about, to love, to hate, to create baseless conspiracy theories about, that's NVIDIA. And we have a pretty chunky bid down here at 138, 284,000 shares on bid, and overhead 142, 214,000 shares on offer, and 143, 403,000 shares on offer. We're just consolidating here around VWAP. And we have Tesla, and we're just stair-stepping lower to new lows. We got a big bid on Tesla at 260, 89,000 shares on bid there. So we'll see what happens if that, if basically sellers have the amount of supply to push through that level. But overall, Tesla looks like the weakest of the Mag 7 from its open. Let's move back to the S&P 500. We do have now those flows coming in from the S&P options visualizer. And by the way, if you're interested in checking out Bookmap, you can get up to 40% off. Visit traderaid.com/bookmap. Scroll down to the specials. That's traderaid.com/bookmap. You can get up to 40% off on those deals. If you're interested in the SPX options visualizer I've created as an add-on for Bookmap, and you do have to have Bookmap to use it, visit traderaid.com/SPX. That's traderaid.com/SPX to learn more about it. And if you'd like to check out what we're doing at TraderAid, visit our website, traderaid.com. You'll see we have a special. You can use the code Halloween31 for 31% off your first month, quarter, or year of TraderAid. And so we have seen a bit of that stabilization off the lows in the S&P, right? We got right up to that level. I said we'd probably see some resistance in that convergence area between the point of control, VWAP, and those sell deltas. Indeed, we did. We took a bit of a pull from there. And now we're coming back up, consolidating, and looking like we're going to make another push. And if we zoom out and we look at these options levels, we can see that there's more interest below. These are hedging flows. They're so far away from spot price that there's really no other explanation for me. I don't think we're about to move down 100 points in the regular trading hour session, but I do think these are hedging flows ahead of earnings this week, and particularly ahead of Alphabet earnings tonight, right? So we'll see how this takes shape. Usually hedging flows are most heavy in the first half hour to hour of trading, and then we start to see kind of more normalized flows. So we'll see what this looks like as we go throughout the day. We can also see this large offer overhead just below 58.70. There is some convergence with the hot call. So this will be interesting. If we can make this push above the point of control and VWAP, I believe that we could start to target that, let's call it 58.69 level as a potential upside target for ES. Got about 5 minutes left on the stream, and we do have two macro events coming up. We've got JOLTS job openings with a forecast of 8 million. Prior reading was 8.04 million. And CB consumer confidence with a forecast of 99.5, prior reading 98.7. We are making that push now above VWAP for the first time in this trading session, testing that level. We can see that vol trigger, lower pivot, convergence area, the really bouncing off SPX 5800, which is the largest level of options positioning on the chain. That was largely to be expected. We talked about it before it happened. We also talked about this move up into the point of control VWAP convergence area and potentially seeing some resistance that first test. We got that. Now we've kind of fallen back and are retesting it. And I like the way this looks. It looks like we're putting in a higher low and pushing to a higher high. And I believe that buyers are about to try to take control of the price action here. We can also see, if we're looking at this from a 20-minute opening range perspective, we're about to push above that 20-minute opening range, which would also be constructive if we are to form a trend day, if such things exist anymore. To the upside. So to recap, I think some of that initial pressure was hedging flow ahead of Alphabet earnings and just this jam-packed week of earnings in general. And those hedging flows tend to kind of cap out after the first half hour to hour. So then we start to see some more organic price discovery. And I think it's going to be really important to monitor whether we start to see calls outpacing puts in SPX and in some of the other unusual flows we track in single stocks and in ETFs. But overall, this is a bullish development as we're starting to make a push above that 20-minute opening range. But I would be somewhat cautious only because we have two key macro data points coming out in just about 2 minutes here with JOLTS and CB consumer confidence. I'll stay on for just a minute after to kind of analyze those numbers for you all and look at the market impact. I hope this stream has been helpful to you all. I always have fun doing it. And I think it helps to demonstrate just how useful Bookmap can be if you're looking at it through a more nuanced lens, looking for these convergences and how they may impact price discovery. And we're going to bring on the live squawk from Financial Juice to rattle off those macro events. So I'm going to just pause and take a moment to put that on. There we go. Also, folks, be sure to join me for Alphabet earnings tonight. I will be watching them live and broadcasting the conference call with the price action in the shares. So it'll be pretty cool. I'll be doing that for
NATO's
all the big
route
reports.
says, I met EU's von der Leyen and agreed to set up a new task force to strengthen NATO-EU cooperation.
There's our friendly British Financial Juice squawker. Just over 1 minute away from JOLTS and CB consumer confidence. You can see liquidity starting to lighten up on the contract here. This is one reason it's a little more dangerous to try to trade these events because it's already an illiquid day. But now the order book depth is just 34,000.
1 minute remaining. I'll lead with US CB consumer confidence.
40 seconds. Continuing to see the market want to push higher, but these events are going to be important.
Ten seconds. So US Jolts job openings coming in first at 7.443 million, 7.443 million lower than forecast, 8 million. Still waiting for CB consumer confidence, but seeing some downside in the dollar. So US Jolts job openings prior revised 7.861 million, 7.861 million. And CB consumer confidence 108.7, 108.7 higher than forecast, 99.5.
Voice news disconnected.
All right, so I'm going to turn off the squawk as we wrap things up here. And we got a mix of data. Wow. Huge beat in consumer confidence, 108.7 versus a forecast of 99.5. And a pretty chunky miss in JOLTS. Actual reading of 7.443 million versus a forecast of 8 million, the prior reading being revised down to, I believe, 7.861 million from 8.04 million. So this is an interesting mix. I think it's broadly constructive for equities today. You know, you didn't want to see job openings do what they did last time, at least initially. They've been revised lower since, but initially it looked like last time jobs openings were growing pretty heartily, much more than expected. And that did put some upward pressure on rates, and it did spook investors just a bit. This is the opposite. It's a bit cooler than expected. It largely is in line with what the Fed wants to see. They want to see the job market kind of cool off and stabilize and get back to pre-COVID trends. And this reading largely gets in line with that trend. And then consumer confidence coming up, that's largely constructive, particularly ahead of the big holiday spending season. So I would say that both these macro data points are broadly positive for price discovery in equities, and it does look like the market overall agrees. We'll see what happens when liquidity comes back into the ES contract. It's still, like you can see on the heat map, it's pretty dark right now. So it does usually take just a little while after the data has been released for, liquidity to come back in the order book. Right now, it's just order book depth of 32,000, which is extraordinarily low. But overall, we can see there is still that chunky offer overhead. There's another one over that is in some way converging with the hot call level. I think as soon as we start to see these hedging flows lighten up a bit, because the hot put's the most active contract on SPX right now, if the hot call exceeds that, I think that will help to push us higher and release that liquidity around 58.70. So overall, looking for more upside today. And I think we've gotten that push above that 20-minute opening range. We have broadly kind of formed this bottom right around that vol trigger, that S&P 5,800 level. So looking constructive overall, and the data supports further upside from here in my view. So I hope this has been helpful to everyone that tuned in. Appreciate you all tuning in. I'm here every week, Tuesday, 9 a.m. Eastern. So join me next week. Until then, I hope you have a great trading week ahead.